Everyone knows what health insurance is, but there's another approach to healthcare that's gaining a lot of attention right now: health shares. They both help with medical expenses, but the way they do it is very different. And those differences are a big reason why a health share often costs about half as much as traditional health insurance. So in this video, we're going to compare health shares versus health insurance. We're going to talk about what's different, how they work, and how those differences can make a major impact on cost. The first big difference between health insurance and a health share comes down to motive. So where your money actually goes. With health insurance, your premiums go into a large corporate system. A portion of that money goes towards medical claims, but a meaningful share is used for administrative costs, marketing, executive salaries, and even lobbying. It's a massive industry built to manage financial risk and to maximize profits. With a health share, your monthly contribution goes towards helping other members with eligible medical needs. A small portion of it goes towards administration costs. There's no incentive to deny care or protect profit margins because health shares are nonprofit organizations. They're focused on people, not shareholders. Now let's talk about regulation, because this is where a lot of the confusion comes in. You'll often hear critics say that health shares have no legal guarantees, and that's technically true because health shares are not insurance. Insurance companies are regulated by state insurance commissioners and can make legal guarantees, even if they do deny and delay your medical bills. Health shares operate under state contract law, not insurance law. That means they can't legally guarantee the payment of medical bills, even if they fully intend to. But that doesn't mean they won't pay. It simply means they're structured differently. Health shares follow written member guidelines. These outline what types of medical needs are eligible for sharing and how the sharing process works. If your medical needs meet those guidelines, the organization facilitates payment, either directly to your provider or as reimbursement to you. And for many families, health shares have proven to be dependable when it matters most. Now, if you've ever had health insurance, you've probably seen something called an explanation of benefits. Well, with a health share, you have member guidelines. These guidelines explain what's shareable and what's not. And they're usually much more straightforward than the fine print in an insurance policy. Both systems have paperwork, but health shares do tend to make it easier to understand what you're responsible for and what the community will help with. Now, with health insurance, you pay a monthly premium, and on top of that, you'll likely have deductibles, copays, and coinsurance before your plan starts helping. With a health share, members make a monthly contribution, sometimes called a monthly share. And when you have a medical need, you pay what's called a member responsibility amount. Though every health share calls it something different, you might see it listed as an initial unshareable amount, or IUA, an annual household portion, or a qualifying amount. But they all mean basically the same thing. It's the amount that you agree to pay towards your medical bills before the health share community steps in to share the rest. Most health shares apply that amount per medical event, while others let smaller bills accumulate toward it. Some even have a cap, so if you've had a really rough year and reached a set number of sharing requests, you don't have to pay another member responsibility amount. And if your health share includes preventive care, things like routine checkups or screenings can often be shared or reimbursed right away without first having to meet your member responsibility amount. Again, all of this is going to be in your member guidelines. Here's another simple difference. With insurance, you file a claim. With a health share, you submit a need, or sometimes called a sharing request. It's essentially the same idea. You're asking for help with medical expenses. The difference is, with a health share, your request is reviewed based on the member guidelines, not insurance codes or network restrictions. Now, here's another important key difference to understand. Most health insurance plans are required by law to accept and pay for pre-existing conditions right away. Health shares work very differently. Pre-existing needs aren't shareable in the first year, and then partial sharing becomes available as your membership continues. That structure is actually one of the key reasons health shares can keep monthly costs so much lower. Most people who join a health share are already pretty healthy. They're not looking for something to handle ongoing medical treatments right now. They're joining for protection against the large and unexpected events that could happen down the road. And when you have a community made up of mostly healthy people, there are naturally fewer medical needs being shared, which helps keep the entire health share community's costs lower and sustainable over time. So here's the big picture. Health insurance is a for-profit business and a health share is nonprofit community. Health insurance is regulated by insurance law, and health shares are governed by contract law. Health insurance has premiums, deductibles, copays, and coinsurance, and a health share has a monthly contribution and a member responsibility amount. Health insurance has legal guarantees, but can also have denials and appeals, and health shares have no legal guarantees, but they do have clear guidelines and a strong track record. Health insurance, you file a claim. With a health share, you submit a need or a sharing request. With health insurance, they will cover pre-existing conditions immediately, and with a health share, there are no or limited sharing for pre-existing conditions. So now that you know how health shares compare to traditional health insurance, the next question is, well, how does it actually work when you need to use it? Most people understand the basic idea of a health share, but they're not quite sure what happens when you actually go to the doctor or face a big medical bill. In my next video, I'm going to walk you through exactly how to use a health share, from preventive care and smaller medical visits to major medical events like surgeries or hospital stays. So go ahead and click over to that next video and I'll show you what it looks like in real life.